Welcome to first and only SaaS News Digest, featured on LinkedIn, where I cover news, events, and updates that are happening in the SaaS community worldwide. And our first digest today takes a look at The Pipe, a company focused on transforming recurring revenue into the upfront capital for growth without debt or dilution. The fast-growing fintech has just raised another round of funding at $2 billion valuation, and this comes just 2 weeks after raising $50 million in growth funding. The current round is still ongoing, but sources close to the deal say that The Pipe has raised over $150 million in massively oversubscribed round. Greenspring Associates is leading the round with additional participation, both new and existing investors. And Pipe's original goal was to give SaaS companies a way to get their revenue upfront by pairing them with investors on the marketplace. But now, according to the Pipe co-CEO and co-founder Harry Hurst, the company is branching out beyond SaaS companies. The platform will now be available to any company with a recurring revenue stream, and this could include D2C company subscriptions, ISP streaming services, telecommunication companies, and even VC fund administration and management. And according to a TechCrunch writer, Mary Ann Azevedo, the platform assesses a customer key metrics by integrating it with accounting, payment processing, and banking systems. Then it instantly rates the performance of the business and qualifies them for a trading limit. This trading limit starts at $50,000 for smaller, early stage, and bootstrap companies, and they go above $100 million for late stage and publicly traded companies. Tradable ARR on the Pipe platform currently exceeds $1 billion. And our next digest today focuses on the differences between monthly recurring revenue and annual recurring revenue for SaaS companies. Writer Atay Saji from Crunchbase.com offers some key points for each of these different metrics. First, when it comes to annual recurring revenue, or AR, keep in mind that this is the metric is relevant to the annual plans. Payments for AR can be billed monthly, but the commitment from the customer is for at least 12 months. Monthly recurring revenue, or MRR, is only relevant to the monthly plans, and the customers can cancel at any time. So in order to increase customer retention, Saji says that SaaS companies tend to prefer annual subscription models. But those are the various considerations when it comes to choosing the right one for your company. Product maturity is one such consideration. Early-stage products usually prefer monthly plans because they offer customers the opportunity to try the solution without a huge commitment. As the product becomes more mature and there is a clear market acceptance for it, offering annual plan at the discount is a good next step. Another factor to consider is the type of the customer you service. Saji says that the enterprise customers tend to prefer annual subscriptions because they offer much more high-touch relationship. So with SaaS companies relying on recurring revenue to fuel the growth, it's an essential to get the maximum lifetime value from each customer. And doing so may include or help you to focus on MRR and progressing this offer to annual options. And our final digest highlights some of the expectations for artificial intelligence industry in 2021. Forbes writer Nisha Talagala predicts a growing focus on low-code or no-code solutions. Last year saw this industry growth across the board, from apps to targeted vertical AI solutions. These low-code or no-code platforms enable building entire production-grade AI-powered applications without any deep programming knowledge. Next on Talagala's list for 2021 is the focus on advanced pre-trained language models. There has been many advancements in natural language processing space. Models in this space are extremely powerful and have revolutionized the language translations, comprehension, summarization, and even more. But those models are also extremely expensive and time-consuming to train, which means that pre-trained models present an opportunity for new generation of effective and easy-to-build AI services. We might also see similar opportunity when it comes to generative adversarial networks, or GANs. GANs have proven remarkable in creating art and fake images. Similar to transformers in the natural language processing space, GANs are also complex to train and tune. But new innovations are dramatically reducing the data size required and inspiring use of GANs in everything from medical applications to deepfake videos. And finally, building on the low-code or no-code advancements mentioned earlier, more and more kids are building their own AI. For example, high schools in the US are starting to teach AI, and the middle schools may soon to follow. The overall 2021 is expected to bring an increase in real-world AI applications and continued democratization of artificial intelligence. Now, of course, with younger players getting involved, we will continue to see even more innovations in the AI space. I hope you enjoyed SaaS News Digest. The SaaS News Digest belongs to all of us and provides the value to members of our community because of you. So I'm asking you to like or share the SaaS Digest on your LinkedIn page, and let's work together in developing this community and setting new SaaS global standards. My name is Artem Gassan. I'm the general partner at SaaS Growth Ventures, and my superpower is I fuel growth and revenue for SaaS companies. Thanks for watching, and I'll see you next time.